In recent times, the financial world has been abuzz with a revolutionary digital currency, Bitcoin. This intangible asset has been making headlines not just for its unprecedented growth, but also for the profound impact it's had on the global financial landscape. Ever since its inception, Bitcoin has been a hotbed of discussion, speculation, and excitement in the crypto community. From its humble beginnings, Bitcoin has grown exponentially. It's been a rollercoaster ride with thrilling highs and jaw-dropping lows. Yet it's this very volatility that has sparked interest and intrigue among investors and spectators alike. Recently, there have been some fascinating developments in the crypto world. An increasing number of millionaires are entering the market, and Bitcoin is being taken more seriously as a flight-to-quality asset. With the potential approval of Bitcoin ETFs, an upcoming Bitcoin halving, and the speculated loss of the US dollar's world reserve currency status, there's a lot to talk about. With its increasing popularity comes an intriguing question. Is Bitcoin deflationary? And what can we expect next? To comprehend Bitcoin's potential deflationary nature, we first need to distinguish between deflationary and disinflationary. Let's start by understanding these terms in the context of traditional economies. Deflation, simply put, is a decrease in the general price level of goods and services. It means that the currency can buy more goods and services than before. Imagine a scenario where a loaf of bread used to cost £2, but now it's available for just £1. That's deflation. However, it's not always good news. When deflation occurs, people might delay purchases and investments as they anticipate prices to fall further, which can lead to a slowdown in economic growth. On the other hand, disinflation is a decrease in the rate of inflation. It's not about falling prices, but about the rate at which prices are increasing. If last year the price of a car increased by 5%, but this year it only increased by 2%, we're experiencing disinflation. The prices are still going up, but at a slower rate. This can be beneficial as it maintains the purchasing power of money, and it's often a sign of a healthy, stable economy. Now, let's transition these concepts into the realm of cryptocurrencies, specifically Bitcoin. Bitcoin is often touted as deflationary due to its capped supply of 21 million coins. This limit means that no more Bitcoin can be created once the cap is reached, which could theoretically lead to increased purchasing power of the cryptocurrency over time. However, some argue that Bitcoin is actually disinflationary. The rate at which new Bitcoins are created decreases over time, a process known as halving, which slows the rate of monetary inflation. While the total supply of Bitcoin is capped, we haven't yet reached the limit and won't for some time. So the supply is still increasing, but at a decreasing rate. So with these definitions in mind, where does Bitcoin stand? Given its fixed supply, some classify Bitcoin as deflationary. However, others argue that it's more accurately described as disinflationary. Let's explore why. Bitcoin's design is undeniably unique, and its features contribute significantly to the ongoing debate about its economic nature. Unlike traditional fiat currencies whose supply is controlled by central banks, Bitcoin's supply is finite, capped at 21 million coins. This fixed supply feature leads many to classify it as deflationary. But wait, there's more to the story. Bitcoin not only comes with a fixed supply, but it also incentivizes saving and sound investments. This is a key characteristic of disinflationary economies. In a disinflationary economy, the rate of inflation decreases over time, encouraging individuals to save and invest wisely. Bitcoin's design encourages this behavior, making it more akin to a disinflationary asset. However, there's another side to the coin. Bitcoin can be slightly deflationary due to the potential loss of private keys. When a Bitcoin owner loses their private key, the Bitcoins associated with that key become inaccessible, effectively reducing the active supply of Bitcoins. This inadvertent loss of supply can cause Bitcoin to exhibit deflationary characteristics. So is Bitcoin deflationary or disinflationary? This question is still a subject of debate among economists and crypto enthusiasts alike. Some argue for its deflationary nature due to its fixed supply and potential for lost keys, while others highlight its disinflationary features, such as its incentivization of saving and sound investments. While the debate continues, one thing is clear. Bitcoin is challenging the status quo of our current financial system. As Bitcoin continues to mature, what can we expect in the future? Many experts believe that Bitcoin will continue to grow in its influence and impact. One key factor is the potential approval of Bitcoin exchange-traded funds, or ETFs. This would allow Bitcoin to be traded on traditional stock exchanges, potentially opening it up to a much wider market. Another factor to consider is the upcoming halving, a process in which the reward for mining new Bitcoins is cut in half. This reduction in supply could lead to a significant increase in the value of each individual Bitcoin. In addition, the US dollar's status as the world's reserve currency is increasingly being challenged. If the dollar were to lose this status, Bitcoin, with its decentralized and borderless nature, could potentially step in as a new global standard. Finally, as the number of millionaires worldwide continues to grow, so too could the demand for Bitcoin. As a deflationary asset, Bitcoin could become increasingly attractive to those looking to preserve their wealth in a volatile economy. The future of Bitcoin is uncertain, but it's clear that it's a force to be reckoned with. Bitcoin has proven to be a fascinating and potentially revolutionary development in the financial world. As we delve deeper into the heart of this digital currency, we uncover layers of complexity and intrigue. The journey of understanding Bitcoin, its deflationary or disinflationary nature, and its potential implications on our financial system is a continuous one, and it's a journey that is well worth taking. This is not simply about understanding a new form of currency. It's about exploring an entirely new perspective on finance, one that challenges traditional norms and proposes innovative solutions. As we continue to navigate through the intricacies of Bitcoin, it's important to approach it with an open mind, a willingness to learn, and a sense of curiosity. The world of Bitcoin is ever evolving, and it's crucial that we evolve with it. Remember, Bitcoin is more than just a digital asset. It's a vote against various entities and ideologies. It's a stand for financial freedom and independence. It's a beacon of hope in a world of monetary uncertainty. So keep asking questions, keep seeking answers. The more we learn about Bitcoin, the more we understand its potential to disrupt traditional financial systems and initiate a new era of financial sovereignty. Stay curious, keep learning, and you might just be at the forefront of the next big revolution in finance. Until next time, keep exploring the world of Bitcoin.